The countdown is on. We're just one day, 6 hours, 43 minutes, 15, 14, 13 seconds from the next round of tariffs kicking in on China. But some retailers have already gotten ahead of the trade war for now. Let's get to Jane Wells at the Port of Los Angeles, where the clock is ticking to the deadline. Jane.
Oh, my God. Well, Melissa, these tariffs are going to hit a lot of things that consumers buy. So it's basically been a red alert, no pun intended, to get things here before Sunday, even if it costs more to get them here. So let me give you a specific example. Take those Black Friday TVs. Now, Stephen Ferreira of Ocean Audit says those TVs don't usually start arriving here from China at this port until the end of September. But after the president announced these new tariffs August 1st, Ferreira says TVs became the single largest so-called bulk move between August 15th and the 26th from China into this port. 30 to 50 containers on average per ship from China were filled with TVs. Of course, the president later delayed the TV tariff to December, but by the time he'd already said that, those ships had set sail. Say that. Now I want to show you also something about how supply chains are changing. Okay, this is an image I took from the Marine Traffic app from right now, showing the ships right around me. The light green squares are container ships. In the area right around me, there are 19. 6 of that 19 are from China, so less than a third. In a port where usually 60% of the traffic is coming from China. So 6, though, is still more than anybody else. But South Korea comes in second with 3. Then you have 2 ships each from Japan. Let me see, Taiwan and Canada, followed by Vietnam. There's a ship from Thailand, and there's even 1 container ship here from France, guys. Back to you.
Wow. Jane Wells in San Pedro, California, as I learned this morning.
It's not San Pedro.
Joe said San Pedro, and Jane just excoriated him.
Great word.
Oh, my. And he's from here.
You should know better.
Isn't Jane the best? I mean, how can Jane not be on this show like on a weekly basis?
Every day.
Every day?
Every day.
I'll sign up for that right now.
Enough.
Stop.
Have a great weekend, Jane. Thank you. Jane Wells in San Pedro, California. We saw this with the threat of the border tax. We saw a lot of retailers pull in their goods before Christmas to try and make up, and that caused for a lot of lumpiness. I mean, in terms of the economic data. And then also, we didn't really know what the impact was for a while.
That's why one of the reasons that one GDP print, which everybody got so excited about, was probably a function of everybody pulling things forward. And that's great if you pull things forward, if there's demand on the back end. I'm not certain there's going to be that demand on the back end, which was really what sets us up for some dicey times over the next couple of months. So, again, there are more things going on than just U.S.-China right now, and I think you have to be aware. It's a great weekend to go and just think about what's going on in the world and ask yourself, is that a good environment for stocks?
But you think that actually the consumer is going to deteriorate that much between today and, say, Black Friday, or today and Christmas?
I think it's so hard to know because we are at this crossroads. If you look at the consumer confidence data, definitely rolling over, but still somewhat elevated. And which way is it going to break probably depends a lot on what happens with trade. And I know it's going to be dicey. I know this is going to drag on for a long time. But I still find it hard to believe that the president is going to try to torpedo the economy or to torpedo the market heading into an election year. He knows that the presidents that don't get reelected, it's because the economy is not doing well. So maybe I'm being overly optimistic, but I think that's enough to keep confidence levels where they are.
I mean, I think on an investment side, it really gets down to this. We know there is no consumer discretionary sector. It's 62 stocks. It's, 10, 11% of the S&P, and yet 5 names are half the weight. And you know the names. Amazon's 21%, Home Depot, McDonald's, Starbucks, Nike. You've got if you look at the equal weight sector, so now you get rid of the influence of just a few names, it is making new 52-week relative lows and all-time relative lows compared to the actual sector. And it's back to 2010 relative to the S&P. It's really sorting out the winners and losers. All of these things that are going to end up closing their stores, closing their doors, it's just a few names, and those names are getting back to, are they GARP? They're all expensive.